This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Russian crude oil production in June exceeded quotas set by the OPEC Plus group, but the Energy Ministry pledged on Wednesday to stick to the required output level in July. It said the production level was assessed by independent sources certified by the OPEC Plus deal. These include international consultancies. The ministry said Russia had sent its schedule on overproduction compensation to the OPEC Secretariat, and that its oil output had fallen each month starting from April. Under the OPEC Plus accord, Russia's production quota stood at 8.979 million barrels per day in May, including extra voluntary cuts, pledged by 8 group members.
Oil prices eased on Thursday as concerns over weak demand in China, the world's largest crude importer, and expectations of a nearing ceasefire deal in the Middle East overcame gains in the previous session after draws in U.S. inventories. Brent crude futures for September fell 59 cents, or 0.7%, to $81.12 a barrel by 0630 GMT. U.S. West Texas Intermediate crude for September slid 61 cents, or 0.8%, to $76.98 per barrel. Both benchmarks settled higher on Wednesday, snapping consecutive sessions of declines after the Energy Information Administration said U.S. crude inventories fell by 3.7 million barrels last week. That compared with analysts' expectations in a Reuters poll for a 1.6 million barrel draw.
Moving on to the top news in the energy sector.
U.S. oil inventories fell across the board last week on higher crude exports and gasoline demand, the Energy Information Administration said on Wednesday. Crude inventories fell by 3.7 million barrels to 436.5 million barrels in the week ended July 19, the AS said, compared with analysts' expectations in a Reuters poll for a 1.6 million barrel draw. Net U.S. crude imports fell last week by 388,000 barrels per day to 2.7 million barrels of oil per day, as exports rose 222,000 barrels of oil per day to 4.2 million barrels of oil per day. Stocks at the Cushing, Oklahoma, delivery hub for U.S. crude futures declined by 1.7 million barrels, the EIA said.
One of the standout commodity stories so far this year has been China's demand for thermal coal, with the world's largest importer seeing record shipments arriving in the first half. China's imports of thermal coal from the seaborne market, used mainly to generate electricity, were 168.73 million metric tons in the first 6 months of the year, up 8.5% from 155.51 million in the same period in 2023. According to data compiled by commodity analysts Kepler. This was the strongest first half in China's history and puts the world's second biggest economy on track for another record year for coal imports in 2024. Next, we have the top news in metal markets. London copper fell further on Thursday to trade below the $9,000 per metric ton level for the first time since early April, amid sell-offs among investors with a darkening demand outlook by China. 3-month copper on the London Metal Exchange fell 1.4% to $8,981.50 per ton by 0735 GMT, marking the 9th straight session of decline and the lowest level since April 3. The most traded September copper contract on the Shanghai Futures Exchange fell 2.4% to 73,030 yuan, $10,084.79 a ton, also a more than 3.5-month low.
Gold prices fell 1% on Thursday as investors booked profits ahead of U.S. economic data that could offer more cues on when the central bank will cut interest rates this year and by how much. Spot gold fell 1% to $2,372.74 per ounce by 0725 GMT. U.S. gold futures dropped 2.1% to $2,366. When you look from a fundamental perspective, there are no factors pressuring gold. So, it looks like we're seeing some profit-taking, and from a technical perspective, prices could move lower, said Kelvin Wong, OANDA's senior market analyst for Asia Pacific.
We will now look at the top news in the agricultural sector.
The global sugar market is expected to have a smaller than anticipated supply surplus in 2024-25, October to Sept, despite rising production in Asia, due to a significant reduction on the Brazilian crop, broker StoneX said on Wednesday. StoneX cut its projection for Brazil's Center-South sugar output by nearly 2 million metric tons to 40.5 million tons due to this year's lower quality of the sugarcane and a smaller than expected cane allocation to sugar production. The broker said Brazilian mills are keeping a relatively high level of ethanol production, answering to higher domestic demand, so they are not earmarking the amount of cane to sugar production that was expected at the start of the harvest in March.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.